Hello and good day, everyone. Welcome to our second webinar of the year. My name is Fernando Ortiz, and I'm pleased to be joined today with my colleague Matthew Donovan, Head of Market Research at Esgian. Matthew will be presenting on the jackup market and the Middle East. As many of you are aware, recent developments in the region have introduced significant uncertainties into upstream activities, and today's sessions will focus on how these dynamics are affecting the jackup market, both regionally and globally. We encourage you to submit your questions at any time using the Q&A chat box. We will address those during Q&A session at the end of this presentation. Please note that a recording of today's webinar will be shared with all the attendees this week. With that, I will hand it over to Matthew. Matthew, the floor is yours.
Thank you very much, Fernando, and thank you to everybody joining us here today for our presentation, the jackup market and the Middle East. Again, my name is Matthew Donovan, and I'm Head of Rig Market Research here at Esgian. Just a little disclaimer first, and then we are going to move on to some recent developments in the Middle East. And as I begin this, I'd like to stress that the situation in the Middle East does still remain highly fluid, and it is unclear how long any current situation will last. So the changes that we're talking about began after the United States and Israel began attacks on Iran in late February 2026. And those actions against Iran have included Israel striking the South Pars gas field, which connects Qatar's North Dome field. And of course, Iran has retaliated with drone and missile strikes on targets in Israel, Saudi Arabia, the UAE, Qatar, Kuwait, and Bahrain. We've seen infrastructure at refineries in Qatar and Saudi Arabia be damaged and resulting in oil and gas production being shut in, and shipping activity through the Strait of Hormuz is currently blocked by both Iran and the United States. And that's a major focus of the current discussions between the countries. Even if a long-term peace agreement is reached in the near term, the situation will not be business as usual immediately. And as we've seen, concerns that traffic through the strait will remain curtailed for quite some time, even after sort of a peace agreement could be reached. The effects on offshore drilling. We saw offshore drilling in Qatar paused in March with crew evacuated from jackups, but activity on units began resuming in April. However, as of mid-April, Qatar Energy LNG is reported to have begun terminating some contracts early, and at least 2 units are understood to have been affected by this so far. And these are kind of early terminations of 3 to 6 months before the original contract may have been scheduled to end. And of course, that does mean options for those contracts will not be exercised. In the UAE, largest drilling contractor ADNOC Drilling confirmed in early March that its operations were continuing as usual with no material impact. And moving to Saudi Arabia, Aramco is in the process of suspending or delaying a number of jackup contracts. That's estimated to affect around 20 units total, and it's spread between multiple drilling contractors. Suspensions have been beginning as units finish their current wells, and also we've seen units that were previously expected to return to work are remaining off hire for longer. So these suspensions are also kind of blending with some of the previous suspensions that Saudi Aramco had issued. On 24th of March, ARDES reported that a handful of its offshore rigs in the region have been subject to temporary suspensions due to the ongoing regional tensions. And ARDES stated they believe those are going to be short-term in nature. They've not confirmed the number of rigs suspended or the expected length of these suspensions. We've also had Arabian Drilling confirm the receipt of notices of temporary suspension for some of its jackups, and the company has said it is prepared to resume activity promptly once conditions normalize. So as I mentioned, with this situation, it's highly fluid. Current effects over the longer term remain undetermined. The length of suspensions will likely depend on how long open hostilities continue, how much damage has been done to oil and gas facilities needed to handle production, and if the oil and gas produced can be moved from the region to other areas safely. And I should mention that due to the current danger of transiting the Strait of Hormuz, jackups are unlikely to be able to leave the region for work elsewhere, particularly in the near term. So whereas in previous years where we saw a downturn in activity in a region, you might see jackups move for work elsewhere. The movement is a little bit restricted at the moment, so we're less likely to see that. And as we've seen, higher oil and gas prices and concerns over energy supply are now beginning to affect demand in other regions, including activity in Southeast Asia and other areas. So I'll move now to this slide here, the Middle East. As I said, the Middle East remains the largest single region for jackup demand. At the 495 units worldwide, we do have 177 of those units are based in the Middle East at that time. So by far the largest single region. And this is just based on actual rigs in the region rather than the ones working at the moment. So Middle East remains the largest, and that's followed, of course, by the Far East, particularly China, Southeast Asia, India, Mexico, and the North Sea. If we look at the rig status at the moment, you can see at this time, globally, most rigs are under contract or drilling at this time. Do you have a significant number of the warm stacked units do have, all the units that are currently in the yard do have upcoming contracts, and we still have some cold stacked units worldwide, or at this time many of those have been cold stacked for an extended period and are perhaps not likely candidates for reactivation in the near term. Moving on to specifically Middle East jackup supply and status. Most rigs in the region are still under contract and working. We see total jackup supply, as I mentioned, at 177 units, and as of late April, 119 of these are under contract. And that's down by around 3 units from mid-April, and we were down from around 138 units that were under contract at the beginning of the month. So drilling activity again on some of these units has been paused due to the geopolitical situation, and we're also seeing these suspensions and early terminations begin in the area. 32 units are warm or hot stacked in the region this time, including some units that have been placed again on these temporary suspensions. Around 20 of these units have future work in the area, including rigs scheduled to resume their contracts with Aramco at some point. We've got 14 units cold stacked in the region, including rigs stacked in Iran, and reactivation of these rigs is unlikely at this time. As mentioned, we're actually expecting supply in the region to stay relatively stable over the next several months due to the risks of transiting the Strait of Hormuz. At the bottom there, we have the supply by rig manager. So you can see at this time, Ardis is the largest single jackup company in the Middle East with 44 units. That is including its rigs acquired from Shelf Drilling in late 2025. And then, of course, dominant in the UAE market is ADNOC Drilling with a number of jackups. And then that's followed by the Aramco Valaris joint venture, Arrow Drilling, and Arabian Drilling as the major players in the region. Now, taking a look at global activity over the past 12 months, we've seen demand stable in most regions, kind of prior to this activity, to the tensions rising in the Middle East. So prior to the outbreak of war in February, the global jackup market had been stable with demand at around 350 to 360 units per month. And competitive utilization over that past 12 months peaked at around 86% in November 2025 and has hovered around 83 to 85% since then. So I mentioned the Middle East is the largest single region for jackup demand, followed by the Far East, Southeast Asia, India, Mexico, and the North Sea. Now, demand in the Far East is concentrated in China, and demand there has been met by Chinese-owned rigs. We've seen a slight rise in activity in the region from early 2025 to 2026, mostly in response to the specific regional Chinese demand. And then in India, demand from the state oil company ONGC has kept jackup demand steady there. And the company is currently conducting a new tender to replace some of the rigs that were rolling off contract. And then follows a recent tender cancellation. Mexico's a large market for jackups, but activity in Mexico has been curtailed over much of 2025 and early 2026 as state oil company Pemex suspended rigs overpayment issues. However, we have seen some contract extensions and new contracts there in recent months, and we're indicating a potential rise in activity there as the situation develops. And then jackup demand in West Africa, we've seen that starting to pick up recently with some recent long-term contracting in the area. Now, looking at the Middle East specifically, we've seen the current geopolitical situation introduce uncertainty into what was a stabilizing market. Middle East jackup demand had been stable over the past 12 months with both demand and utilization. From 2025 into early 2026, monthly rig demand in the Middle East has been relatively flat at around 137 to 140 units, with competitive utilization in the area remaining in around the mid-80s. And we'd seen prior to the outbreak of war, previously suspended rigs in Saudi Arabia were starting to return to work. This new contract in the region has been slow over the past few months. I mean, particularly since the start of hostilities in the region. We had 2 fixtures in the Middle East in January, and then some short-term contract extensions since then, as longer-term contracts are discussed. So there are a number of tenders currently ongoing, and KGO is expected to issue some awards in the near term for a tender that was previously issued in January 2025. If we look at the regional rig demand split by country over the past year, Saudi Arabia has continued as the largest demand segment. That was around 56 to 57 units from mid-2025, and then recently that's been reduced due to some rigs going on suspension or otherwise rolling off contracts. UAE demand has remained around 36 to 38 units since mid-2025, and in Qatar we saw demand decline slightly from 21 units in early 2025 to around 18 to 19 units from mid-2025 into the first quarter of this year. And as I mentioned, we are starting to see some contracts end early in that region, so we should see a slight dip in demand in Qatar in the near term. And we're expecting a near-term drop in Middle East demand over the rest of the year, but we do expect activity in the region to recover in 2027. Jackup demand in the Middle East is expected to trend downwards in the near term. It's a combination of contract suspensions, early terminations, delayed contract start dates, and rigs rolling off contract as scheduled. So, kind of in response to the tensions and the difficulties in the region, we are seeing these suspensions. So we're seeing from around 127 units in May, we're seeing demand track downwards to around 109 to 112 units in Q3 and early Q4 of this year. Now, assuming a ceasefire or some other terms limit violence in the region, we are projecting that rig demand will trend upwards from late 26 into 2027 as rigs return to work, new contracts are fixed, and we see some drilling increases due to high oil prices and a need to replenish oil and gas supplies and meet global hydrocarbon demands. And in this scenario, demand would stabilize at around 150 units by mid-2027. And with the supply relatively stable, competitive utilization would fall in the near term to around 68%, but would be back above 90% by mid-2027. We do have a number of tenders and pre-tenders underway for around 19 jackups across the Middle East at this time. That's for work beginning in late 2026 to early 2027. And from market discussions, indications are that the majority of these tenders will be awarded. That includes the KGO work mentioned earlier, although some start dates on these could, of course, be fluid due to the current situation. Now, I should mention that forecast demand could change significantly based on the geopolitical situation. If conflict continues or intensifies through 2026, demand could remain curtailed with more rigs suspended or contracts cancelled. In this case, we'd expect to see that rise in demand pushed out further into the future. Moving now to the global market. We are projecting a global rig demand we are forecasting the global rig demand to rise in 2027 as the current high oil prices could buoy a trend that was already emerging. So global demand for both jackups and floating rigs, even before the current situation, was already projected to rise from 2026 to 2027. And that kind of was projected and was already beginning before the recent spike in commodity prices. Jackup demand going forward seen as stable to slightly improving from 2026 into 2027 on firm demand in key regions. And the recent geopolitical situation is not solely responsible for the expected rise in demand, but it is strengthening the rationale for this activity. With supply from the Middle East disrupted and oil prices high, operators in regions like Southeast Asia are looking to boost production. And so that's a combination of boosting production to take advantage of the high oil prices and as a security concern, because what we're seeing right now in a number of regions, particularly in Asia, is obviously supply from the Middle East has been disrupted. So there's concerns about meeting current energy needs going forward. So what we've seen is this has resulted in some new rig contracts, including a recent 3-year term for a jackup in Thailand. And we've seen multiple drilling contractors report an uptick in client inquiries for rigs, including potential new contracts or extensions. So outside the Middle East, we are seeing that that increase in activity being bolstered by concerns over energy supply and, of course, the demand that comes with the demand in production that comes with those higher prices. So in the near term, jackup demand decreases to around 325 units in August, and that's from the Middle East downturn, but we're expecting that to trend upwards again to around 372 to 374 units in late 2027, with competitive utilization for jackups around 90% by middle of next year. And if we look at the second slide there, this is global rig demand forecast. So that includes jackups, semi-submersibles, and drill ships. Floating rig demand globally is tightening into 2027 due to a number of new fixtures over the past several months, and that includes for long-term work in South America, particularly Brazil. And also we've seen new contracts signed for rigs in the US Gulf and in West Africa. We've also got a number of tenders that are in the sort of late stages of discussion and should be fixed over the next several months for work largely beginning in 2027. And I should note that most of these have been in discussion long before the war with Iran, but the current oil price and energy security situation does bolster the rationale for continued deepwater drilling. So the rise in floating rig demand not directly correlated to the current high oil prices, because most of these projects were in the works in years previously. But moving forward, that does indicate a strong rationale for that work to continue. And, we're likely to see more of these contracts fixed. So if we add together for jackups and floated rigs, the combined global demand for these units is expected to rise from around 448 units in August to over 500 units in late 2027, with high utilization, particularly for drill ships and premium jackups globally. Those are the units that are most in demand. We do see, of course, pockets of, demand for harsh environment semi-submersibles in Norway, and some other key areas there. And with the rise in demand for semi-submersible for drill ships, we should see some of that demand move downwards into the remaining 6th gen semi-submersible fleet as we move into 2027. Turning now to rig values, where we're going to talk about where the impact of this recent activity kind of sits in the current situation for rig values. So premium jackups, this disruption in the Middle East hit after values for these rigs had already started to recover. And so we expect the values for premium jackups to continue to recover gradually. And for the North NCS compliant jackups, This is the rigs in Norway. These regions' insulation from global volatility remains structural, with highly specialized units, limited supply, and long-term contracts. So you can see also retaining value there. For the floater market, if the conflict persists, we expect to see, of course, incremental production will need to come from non-Middle East regions, including South America, Norway, Southeast Asia, China, and India. And several of these regions are particularly floater weighted rather than jackup weighted. So under this scenario, demand pressure shifts towards deep water and harsh environment floaters. And this would favor top-end floaters first, so the 7th generation drill ships and the NCS harsh environment semi-submersibles, before translating into broader market tightening for 6th generation drill ships and 6th generation international semi-submersibles. Now, moving now to our key takeaways of this is that we could see improved demand for rigs in 2027. As I mentioned, after a period of stability in 2025, jackup demand in the Middle East is trending downwards due to the immediate effects of the regional conflict. Again, a large amount of uncertainty remains, and we are expected to see that regional demand trend downwards over the next few months as a consequence of suspensions that have already begun. And while the outcome ultimately depends on the geopolitical situation, stabilizing demand in the Middle East is expected to trend upwards in 2027 as rigs return to work over the coming year. Global demand for all rigs is expected to rise from 2026 to 2027, and we're seeing some previously expected increases in global demand being bolstered by the current commodity prices and energy security concerns. So there does remain, while the floating rig demand uptick was already in progress, the longer the current oil price situation continues, the more rationale there will be for continued activity in this market. And we could indeed, while the longer term projects, were already in place, we could see some near term upticks there also in response to supply concerns. And under the current scenario, values for premium jackups and high-end floaters are continuing to gradually recover. All right. Thank you, everybody, for joining us for our webinar today. I believe we will now move on to the Q&A section with myself and Fernando. So thank you all for attending.
Thank you, Matthew, and thank you to everybody who joined today's sessions. If you would like to discuss any of the topics covered in more details or explore additional data from our Rig Analytics and Rig Values platforms, please feel free to reach out to us directly. We appreciate your time and look forward to speaking with you. And now we move to the Q&A sessions. So we have 2 questions so far, Matthew.
Okay.
Let me go with the first one. The first one says, how did the current geopolitical situation and higher oil and gas prices impact the jackup rig demand in the Caspian Sea region?
Okay, so that's a great question. The Caspian is kind of is a sort of it's a geographically isolated region. So we really don't see rigs move in or out of the region. So you've always got a consistent supply there, and I think with the concerns over energy security, you could see a situation similar to what we saw in the Caspian with the kind of beginning of the Ukraine-Russia war as well. People look to regions like the Caspian as a potential alternate source of activities on there. So it's you don't see giant spikes in demand in the region because there's just very few rigs to meet that. But the higher oil prices and the security situation, I think, does bolster the idea of longer term demand continuing in the Caspian.
Thanks, Matthew. We have another question here.
Okay.
Which regions outside the Middle East do you see being directly affected by the current situation?
Of course. So of course, everybody's affected by both the high oil prices and also just the lack of supply. And I think that lack of supply is really kind of felt maybe more keenly in some areas of Asia, for instance. And we are I think where we're seeing is areas like Southeast Asia where there's already production that you can boost. Kind of there's more sort of inquiries about an uptick in demand there specifically. So sort of Southeast Asia. Of course, the Chinese market's a little more self-contained in terms of the rigs that are working there. But I think Southeast Asia is the one where we see sort of direct, impact from this activity. You've got operators there who want to both boost their demands, who want to boost their production, and so they're upping their inquiries. As I said, we saw a 3-year contract fixed there recently, and the current situation was sort of mentioned particularly by that company as something that made them want to increase their drilling activity in the short term. And led to sort of securing a rig as they go forward. So Southeast Asia, I mean, I would say it's a particular one. Obviously, there are knock-on effects in every area, but I think probably Asia's more the way you see it make the most impact in the near term outside Middle East.
Thank you, Matthew. I will go to the next one. What impact do you see the exit of UAE from the OPEC cartel have on the drilling industry?
I think you got to look at that, in terms of obviously if it's not, if it's not moving in lockstep with the other OPEC nations, we'll have to kind of watch and see what effects it'll have on the local drilling there. I mean, the UAE is a very important, market for jackups. Said largely, ADNOC's a really big portion of that Middle East demand, and with them outside that, we could see, we could see them maybe not have to follow particular restrictions or directives that from OPEC. So could see an uptick in drilling there as they kind of go for their sort of national strategies rather than following the larger one.
Thanks, Matthew. I will go to, I guess we have time for one more. If the conflict ended today, how long do you think would take for the region to return to its previous operational condition?
That's a that's a really good question, and I mean, there's much, there's a lot of different moving parts to this. We've seen a lot. Obviously, there's been a lot of damage to downstream facilities, refinery capacity, things like that. I mean, from what I understand, with the launching of mines and things like that in the Strait of Hormuz could really have a long-term effect on that. So I don't think it's something that will go really will go spring right back to where things were. I think this is something where the continued impact on all aspects is gonna go forward over the next sort of several years. I think just in terms of some kind of rebuilding or restructuring in the area. So not from what I understand.
Okay, Matthew, thanks. I guess we are running out of time, but don't worry, we have a couple of questions in the chat box and the Q&A box. We will reply to those questions personally to you. And with that, we would like to thank everybody again for joining us. And
yeah,
please,
thank you.
Please reach out if you have more questions or doubts about these presentations, or if you would like to know more about the market. Thanks, Matthew. Thanks again.
Yeah,
Thanks, everybody.
Thank you, everybody. Appreciate it.